All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Friday, October 18th. So this is your end of day and end of week review. We'll go over some observations for the week, but as I usually mentioned, this is the video that I kind of enjoy the most because the week is over, and we can kind of reflect about how the market behaved, some of the major key observations that I've got written down, and we can kind of plan for the week ahead. And normally what happens is I do this video, and then of course, this is pretty high level, and then over the weekend, what we do is we kind of go into the nitty gritty, and then start to look up setups for the week ahead. So if you're not a member of Tribeca Trade Group, you're really only getting watching these videos, you're only really getting like the high level of what we do, and really the value add kind of comes throughout the day, and what we put out in the morning and so forth, and then of course the setups, and mainly I think right now it's the strategy more than anything else, more than the option flow that we see on the tape or just individual setups right now. I think overall, your strategy and how your position, your risk taking, something that I talked a lot about in last night's video. If you didn't get a chance to see last night's video, I probably said risk to reward setup, where we were in the market last night. Where I really didn't think it was a great risk to reward, and I mentioned that, and I kind of try to be objectives and say things to kind of let you guys formulate the opinion. But again, the weekend analysis is really where I kind of set the tone for what I'm watching and so forth. So here's the risk disclaimer. Everything that we're going over is for information purposes only, not giving out any advice or any investment advice or anything like that. Everything's for information purposes only. So I want to talk about the performance for the week. Before we do that, let's do a little chart study. So, number one on the list for the observations of the week, the indices, they stalled out, right? So, again, take a look at last night's video. Also, the chart that I mentioned and some of the notes that I put out, in the morning, just kind of talk about how we've been butting up against this downward trend line, and really it matters until it doesn't. Meaning that it mattered here. We fell apart here, which this was just the beginning kind of the trend line. But we did this again in September, right? Again, I kind of feel like a broken record because I've been talking about this an awful lot. But, we failed again here, and that's where the trend line is valid. And, I've been saying that we're hitting it again, and we've had a couple days again. Again, I remember in last night's video, I counted how many times that we actually failed. But it looks like, so we're hanging around. We haven't brushed this off. Obviously we explored some lower levels this morning. On what, I really don't know. It just seems like, there's many excuses that you could try to come up with for today's price action. It's options expiration, it's earnings season, it's this, it's that, it's Boeing. Really, it just feels like we're not ready to. Price is telling us everything that we really need to know. We're just not ready to kind of take that next level higher. The other issue is if we do get above that downward trend line that I've got drawn in the dotted blue, then we also have the top of value to get through. So as I mentioned probably 7 or 8 times in yesterday's video, it's really not, in my opinion, the best risk to reward setup right now. I think we're getting very close to that breakout level, but we just haven't been able to do it. Now there's probably, if you really take a step back and think about it, I think really what is going on and why we rally on some days and then kind of stall some other days is because we don't have a lot of global things really. These are kind of common sense things. We don't have a lot that is basically taken care of. We've got a lot of overhangs in the market, right? The more and more that the probability comes clear that we're getting over the trade war, the higher the stock market's going to go. If the probability goes down that the trade war is not going to get resolved, then the market's probably going to go down a little bit. These things are definitely affecting in my opinion, how portfolio managers are adjusting, right, to either risk on or risk off. And then also like with the Brexit, which we really haven't talked about too much until this week, but the market started to rally a bit when the probability of a Brexit deal, right, especially over in Europe. I mean, those markets are flying. Did very well this week based on the probability increasing that they get a deal. Now, of course, towards the end of the week, there was some skepticism. The Parliament is saying no, but that's a whole other story. We don't know how that's going to resolve itself, but they're closer than they were 2 weeks ago. All right, so that's kind of what's going on here. And as this happens, what have I been saying? I want some exposure. Again, my opinion doesn't really change here from what I've said the last couple days. I want some exposure in case we do happen to go higher, because it'll probably happen pretty quick if it does happen. But for the most part, continue to position smaller than usual. We were talking in last night's after the close yesterday. I was reminiscing about you know, when I was an institutional trader and the difference in risk taking that happened before the financial crisis a long time ago. But just it also makes me think too, like how I'm position taking risk with positions is much smaller right now because the market is just too sideways. It's too choppy. The other thing I will say is, if you're having a difficult time in this market, first of all, it's a very difficult market to trade. I've traded, again, for a long time now, and I've traded options for a long time as well. And I could tell you from being in the trenches, for years, that this is not sideways markets are really difficult to trade. The more that you end up trading, sometimes the more you end up losing. Because it's just too choppy, and you could really kind of get drawn into to fake out moves. Uh, I won't dwell on this, I promise, but you got to really be careful of the option activity. And again, the reason why I bring it up is so that you're aware. A lot of times we see option activity, like I was giving Square was the example. They bought calls. The stock was up 2% yesterday. That's where they bought calls. And since they bought those calls, the stock's down 6%. So it could really kind of get you into a bad situation. If you're a really disciplined trader, when you're just focusing on price action, and when you see option activity and names up 2% and you follow, and then the next day the names it gave back the gains of 2% and it's down another 4% the next day, you could really you get yourself into bad positions, bad spots by doing that. So that's why I bring it up. I won't talk any more about that because I know it bothers some people. I think when I talk about how this, that sometimes it really provides the opposite of edge. So let me go. So that's basically the S&P. I think also the Qs, right? They also I don't have a trend line drawn here, but I might as well. But it's kind of the same thing. This is not perfect, but because you should really be drawing these to the body of the candle. But it's the same thing. It's stalling out at previous resistance. So also at that top of value too. So the Qs were looking good up until a couple of days ago, but they get to that resistance and they're just having problems with it. IWM inside day today, it had a nice week. If you look at the top line of performance that I've got here, which we'll review in a second, but S&P performance for the week, we did finish up on the week. Diamonds were down on the week. A lot of that was Boeing and a few other companies too did not do well today in the Dow. Remember, the Dow is only 30 companies, and I think Boeing is the top weight. It's price weighted, right? So you have to really be careful of that. The highest price stock in there is the largest weight because every stock of the 30 names, right? They basically get one share goes into the index, right? That's how they do it. So by default, whatever name has the highest price, it becomes the biggest weight. And I think that's Boeing without bringing the components up. So, something like that happens where Boeing falls 6% like it does, it's going to really affect the whole industry. Small caps no doubt outperformed this week. Nice to see that, up 1.2 1.6%. Qs, because they fell so much today. What did they do today? Down about 1% today. They were probably leading until today. The S&P, I should say, but because they fell 1% today. Here's the EFA up 1.1%, so outperforming. TLT, after a nasty week last week, was down 3.8% last week, also down this week as well. And gold, again, a non-factor for the week. So I think that's price action. Again, I try to mention this a lot, is most important. And I think right now where the S&P is, we've seen this level, again, really hammering this point home. Resistance matters until it doesn't anymore. So right now it's mattering, and it's mattering big time. So I'm not really, again, I have got a couple of positions in case we do break out, but positioning for me is much smaller than usual. Let's go. So let's talk a little bit about this. I thought this was very interesting on the tape. When I do see something in option activity that is different, somebody was buying. I mean, look at the size of these trades. I will check open interest on all these because some of them did have open interest, but 29,724 puts. So why is somebody doing this, right? Because if you look at XLI, which also saw some short-term puts, which I participated in today, but also 15,000, that's a 2 million premium order. No open interest on there, so that is opening. If you go XLV, which is healthcare, 17,000. That's a $3.5 million trade. So again, very large positioning. XOP saw one, 2 million notional on that, right? So these are big size trades going out to not this January but next January. So what comes to my mind is, well, what's October, November? You got the election next year. I don't know. Maybe if a different candidate takes office, who's not easy on businesses, this may really come. And then there's XLK. So one thought that I came up with was, well, why didn't they just buy SPY puts than putting all this notional? When you add it up, it's about $10 million of put protection or speculation. I don't know which one it is. Why not just buy SPY puts? Maybe they wanted more riskier exposure, riskier sector exposures, right? Because I didn't see one in XLU. I'll double check. Nope. I didn't see one in IYR. Nope. And I didn't see one in XLP. Now remember, these are portions of the, of the S&P index. So they're not buying puts in the defensives. They're only buying puts in the more, I don't want to say, not every one of these is risk on sectors. Well, I guess it mainly is. And did I show you XLY? XLY too. Also saw one of these as well. This one went up on the bid side, but I think it's the same situation, $2.6 million. And then more here. So that's over $3 million in notional. So yeah, when you add these up, you probably get about over $12 million of premium. That's no sneeze. And again, all in your riskier sector. So someone did this. If they're spending this much money, they must have really thought about this, I would think. But or they're looking at their portfolio and saying, I want it to hedge these sectors. So again, I don't know. We never know like what their position is, and if they're doing these as hedges. But basically, they either want protection, or they are speculating to the downside. Very interesting, I think. So again, you could kind of like formulate an opinion around it. I still think watching price action is most important to see what happens. So that covers number 2. Number 3, earnings season. I mentioned that in the beginning of the video, but this is pretty typical. I was talking about, one of my thoughts earlier in the week would be, hey, watch this market surprise people and actually break out during earnings season. Why would I say that's a surprise? Because normally during our earnings season, it's pretty choppy for the overall indices, right? People are digesting all the new information that comes out from the earnings reports, such as especially what they're guiding going forward. So now it's kind of moving to more typical, where it's starting to get choppy again, and I think once we get into more companies next week, I think next week is probably the busiest week for earnings season. So so buckle up basically, and again, I think I say how are you positioned, but how am I positioned? I'm positioned light for that. I'm not. It's not the right time to go out on a limb. Again, I'll say it. It's okay to have a couple. That's what options are for. They could give you that nice leverage, and you only lose the premium. But do I want to take big option positions right now? No. Stock picking. All right, so let's talk about that for a second. Let's go over the week performance first. So, what performed well? The home builders, again, right? They've been one of the best sectors all year, and they continue. The trend remains for the home builders. Did they take out that? Oh, the VPOC is gone there. I talked about this yesterday. So, in my opinion, right, and you could disagree with me, but probably a really good place to take profits in this group, considering that virgin point of control, which is one of my rules. It's helps me in my trading. Once something like this has been taken out, it's a place for me to take profits. But I continue to see a lot of frustrated people on the tape talking about growth names. Well, look at how well this thing has performed. I don't know if you would classify home builders as growth stocks, but there are groups that continue to trend. You just may not particularly be in all of them. The banks, I want to talk about them as well. Up 2%, right? Pretty decent price action after these names reported. Were the expectations too low for some of the quarters? Perhaps. But we'll see what happens with this group. Am I jumping 2 feet into the banks? No, but I will be watching them. Here's one chart that is interesting. If I can bring this up here. Oh, that's not the one I wanted. This is KBE versus SPY. So banking. The banking ETF, KBE, is all banks, large banks and small banks, regional banks, versus SPY. It's trying to get over this. I know Helene Meisler on Twitter has been talking about the BKX index, which is your bigger banks, your money center banks, also trying to kind of break this downtrend. It's close, right? It's close to happening. Also, if you look at, you know, IWM, which has a lot of banks in it, or value versus growth, right? This is the story back towards the end of August, beginning of September, when value started to really begin to outperform from this major underperformance that they've had for years. Notice it's been kind of taking legs up here. It looks like it might be possibly ready for that next leg here. It's kind of doing some type of, I don't know if I would call that a flag pattern, but maybe a little digestion, and certainly value outperformed growth today. So, going back to the performance, what else did pretty well? Transports did well. You got the regional banks on here too, up over 2%. So all banks, regional banks. Biotech quietly did pretty good this week. Excuse me. This is this 5-day price action, by the way. So banks banks, biotech and healthcare did very well this week. So that's different as well. That's been a lagging group, and it's nice to see I think it was helped by UNH and possibly the dialing down of the rhetoric of free healthcare for all. I guess that helped that group. That's been a huge weight on that group. What performed worst? Once again, the energy companies. Nothing new there. Steel names. So again, some of these trends, like the home builders doing well and the energy names doing bad, that's nothing new. That's been going on all year long. Aerospace and defense, that was mainly today with Boeing. Solar names also did pretty bad. I guess I don't have software in here, but I should have software in here. I'm surprised it's not on the list. Internet stocks did poorly for the week too. So here's the thing. So I want to talk about and I'm going to go into the Fang stocks a little bit here, but stock picking. I know the video is 20 minutes long. I'm going to wrap it up here in probably about 5 or 10 minutes. But stock picking, I think, is really difficult right now. I think people are getting kind of screwed up, especially like if your watch list is all growth stocks. Either A, you broaden your watch list. B, you really pay attention to some of those growth stocks breaking support. C, I think I already said adopt a bigger watch list, but it's also, if you don't want to do that, then maybe stick with some index trading, right? It's impressive how well the S&P is holding up. So, why is it holding up when you see like the Fang stocks go down and so forth? Because other names are performing really well, other areas of the market, right? I've heard this now for weeks where people are like, oh, individual names, they look horrible. It depends which sector that you're looking at. Like here's today's performance, right? Banks accelerated to the upside. Lululemon did great today. Apple did great today. But if you're looking at all uh, if you're looking at all software names or just all growth names in general, if those are the only names in your universe, yeah, you're going to see breakdowns in a lot of places. But that is not what's going on in the whole market, and clearly, that's why the SPY is so close to all-time high. And market breadth, by the way, is not poor. So it's you know again, it really depends on if you're only looking at growth, the biggest growth names. Because if you look at the advanced decline line, something that I look at every couple of days, right? And this is all of NYSE stocks, right? It's actually very close to breaking out. So if you're seeing many names on your watch list break down, you may not have a broad enough watch list that you're looking at. Now, again, what you could do is those adjustments that I mentioned. One of which is you could try to trade a little bit more index right now. There's definitely trades that you can do because I think that stock picking is pretty darn difficult right now. I'm conceding that point that I think it's much more difficult than than it normally is. Also, I didn't go over international, but you could see a lot of international areas starting to wake up a little bit. European financials are now, they've been up for like what, 8-9% now in the last week and a half. So very impressive. The one chart that I keep showing is this EFA chart, right, which is international developed. We actually saw a little bit of DXJ calls today, but this thing might be really interesting here in a week. You might start to see international outperform the U.S. And I'm cool with that because we could trade that, right? Here's what this chart looks like. This is again, international developed over SPY, right? And if we look at like a 5-year chart, so you can see the whole relationship. Look at how much this is underperformed U.S. markets. So it could be that we're ready for, especially like if they get a Brexit deal. I would think that you might really start to see European equities and just international really start to outperform a little bit the U.S. So again, planning ahead a little bit, thinking things out a little bit. I think the EFA trade. If you look at the, sorry, I don't want to go too far off the tracks here, but if you look at the, if you trade options and if you look at the implied volatility in EFA, it is a super cheap trade to put on. So if you think that this thing has a chance to kind of break higher a little bit, again, it's trying to do it a little bit here. But if you look at the, again, you should always be looking at how expensive options are, the implied volatility. But if you just bring up an option chain, which let me see if my system's still up over here. If you go out to, it's not letting me show it, but I looked at this yesterday, and I think the implied volatility, like in November, December options in EFA, are like a 13 or 14, right? So versus like I don't know, Google options are like a 30, 40. So I just throwing that name out there, but they're very cheap to kind of get exposure. So I think it's a compelling trade right now. Then so finally, some ratio charts. I think I already showed IWN, IWO. I think I already talked about most of them. Banks versus overall. And then really like, having a big cash balance right now, just like today, this morning, I've been talking about, how I like to, my bread and butter is swing trading, but it's just not there right now to be doing a lot of swing trading. So instead, what I'm doing is doing more scalping, more day trading, which I'm not, that's normally not where, I love what I really love to do. But if it's going to give us opportunities to kind of scalp, but you have to kind of wait for like days like this. Like I think this morning, where everything sold off for no really good reason, I started to pick up, the day trading in some things where things just got a little bit exaggerated to the downside. So those are the good opportunities, but you have to be position light because you don't want to get caught when we have one of those mornings where everything falls, so that you could kind of focus on new opportunities, right? And again, very much about position sizing. I already talked about financials, but I thought that this was pretty interesting. This is something I wrote, right? Something that I've been hearing. I like to always talk about things that we hear in the media or on Twitter that are not correct. I always like to call out the stuff, just something that I like to do from time to time. But one of the things for a while that I've heard is, oh, we need the banks to participate for this market to make new highs. Well, I don't, guess what? They're participating. They were one of the best performing groups, and the market didn't break out. So we're seeing rotation. A lot of what people didn't think about is, hey, yeah, when the banks start to participate, well, maybe some money gets taken out of tech. Um, so what else? I wanted to talk about. I mentioned about the Fang stocks, right, in Netflix this week. This to me, now I know Netflix gave back all those gains, but if you look at the numbers, and we talked about this earlier in the week, their numbers were not good. So, the trade that we had on for earnings worked really well. I had an iron condor on. I got a little bit nervous once it got to my upper strike, but I'm like, hey, I think this thing's going to come in. I don't really understand why this name is up so much. Now, I wasn't really expecting this much of a reversal, but pretty interesting. I think also it's really difficult with these FANG stocks because anytime they start to get going, like today, this morning, all we heard about is how these names need to be regulated. When that comes up, I think that's really keeping these names under wraps. So they can have a couple day rally, but it seems like whenever they rally, magically a whole bunch of headlines come out about regulation and breaking them up, about how they're monopolies. So this group, I have a hard time under like coming to grips with this group breaking back out if they just keep bringing up regulation and monopolies and things like that. So just bear that in mind if you're trading these. Sometimes day trades and quick trades. Like I was in an Amazon trade earlier this week, and I was not greedy with it. I put on a $10 wide call spread, and I think I went into that for around like 350, took it off for like 550, rather than try to get the whole $10 because it's just too difficult to sit in a trade to think that you're going to get a home run right now. There's too many headlines that happen every other day with this group, and that's how this group has been reacting now, for the better part of a year, or I should say 6 months. All right, guys, so that is it. Have a great weekend, everybody. Again, much more to follow in our weekend analysis that we do. Visit tribecatradegroup.com to be a member. Thanks very much for watching. Have a great weekend.